Hello everyone and welcome back to the sessions on financial reporting. Friends, in this class of financial reporting, we are starting with a very important topic that is titled as Ind AS 116 leases. Now this standard came into effect from 1st April 2019. Prior to that date, the older version of this standard was into practice. That was Ind AS 17, same title, leases. So definitely there were lots of limitations with the older version, and that is why this change was needed. Now friends, changes are always made for good, right? Unless there was a need for change, why someone will go ahead and make those changes? And you would find that this is much enhanced version of the older standard. You don't have to actually compare what was there in Ind AS 17 and what is introduced over here. Even if you are learning this standard for the first time, it's absolutely fine. In fact, I would say it is better that you are directly learning the upgraded version of the standard, that is leases. Now friends, we all know what is the meaning of the term lease. Lease is an arrangement between two parties. One of the party is lessor and another party is lessee. So lessor is the party that owns the asset, and lessor provides the right to use the asset to the counterparty, that is lessee. That means what is transferred by lessor to lessee is not the asset. Lessor transfers to the lessee the right to use the asset. So friends, once you understand the meaning of the term lease, you need to even understand various other basic points in this standard, like what is included within the scope of this standard and what is not included within the scope of the standard. Now in this whole standard, you will find lots of theoretical discussion, and in examination there can be case study based question relating to that. For example, you may find questions which may require you to identify whether a given arrangement is it a lease or not. So friends, I would recommend you one thing: keep lot of patience while learning this standard. It's a big huge standard. We will not jump into the accounting right from the beginning. We will have to go through lots of definitions and other theoretical requirements of the standard. Once you have built up a sound understanding of these concepts, then approaching the accounting part would be sensible. So this standard is applicable on all leases and subleases. I have just mentioned the general meaning of the word lease. What is a sublease? Suppose a party has taken an asset under a lease, okay, and that party has now given that asset under a lease to yet another party. So there is a lessor, there is a lessee, and this lessee has now given this asset to some other party on a lease. That secondary lease is what is known as a sublease. So this standard is applicable on leases as well as subleases, first thing. However, certain types of leases have been excluded from the scope of this standard. So you know one thing in general about Ind AS: wherever there is a specific Ind AS on a particular matter, that specific Ind AS will always override the general Ind AS. So Ind AS 116 is the general standard on the leases. So if there is any specific standard, it would override this, and therefore certain types of leases which are specifically covered under other Ind ASs, they have been excluded from the scope of Ind AS 116. So the obvious question running in your mind is, which are those exclusions? I would mention it one by one. Number one, it is leases to explore or use minerals, oils, natural gases, or other similar non-regenerative natural resources. This is excluded from the standard because such leases are covered under Ind AS 106. Secondly, leases of biological assets are covered under Ind AS 41 that is agriculture, and therefore excluded from this standard. Number 3, service concession arrangements. If you can recall what we have learnt under Ind AS 115, because that matter is covered over there, excluded from here. Number 4, leases of intellectual property, also covered under Ind AS 115 and therefore excluded from this standard. And you know one more thing that we have learned earlier, Ind AS 38, intangible assets, covers leases of motion pictures, video recordings, patents, copyrights, because these are considered as intangible assets, and if you have allowed other party to use your intangible assets under a lease arrangement, it will still be covered under Ind AS 38 and therefore excluded from the scope of this standard. So friends, one small recommendation, whatever I am discussing, I will be displaying the same thing on the screen for you to note it down. So some students who do not prefer writing down, they may just skip that part. I will provide some time for all the students to write notes. My suggestion is, if you have time in hand, writing notes is the best thing. Once you write it down, it will stay with you for a longer time. So writing is always preferred. So choice is always yours. If you want to skip the writing work because the content is there available in your textbooks also, you may just skip that by your choice. In general, I will be providing time to write those notes. So just pay attention on the screen. First thing what I display is the scope of the standard what we have just discussed. So talking about scope of Ind AS 116, it applies to all leases including leases of right of use assets in a sublease, except for, now these are the exclusions. Number 1, leases to explore for or use minerals, oil, natural gas and similar non-regenerative resources. Second, leases of biological assets held by a lessee. Third, service concession arrangements. Fourth, licenses of intellectual property. And last, rights held by a lessee under licensing arrangements for such items as motion picture films, video recordings, plays, manuscripts, patents and copyrights, because these are covered under Ind AS 38. So friends, quickly note it down and then we shall move ahead. Alright friends, after writing up these points, there is another important thing that we should know before we start with the standard as such. Now this standard has a lot of complexity, definitely. So owing to the complexity involved in application of the standard grants certain type of exemptions to the lessee. Now these exemptions are granted to the lessee so that unnecessary complications need not be applied in small leases. So basically, lessee has been granted an exemption by choice. That means there is no compulsion. If certain conditions exist, lessee may opt not to apply Ind AS 116 requirement for accounting for leases. Those exemptions are for the lessee and these are for smaller leases. Now, what do we mean by smaller leases? Number 1, the leases which are short-term lease. That means leases for a period of 12 months or less. Those short-term leases, the moment short-term leases come into picture, the lessee will have choice of taking exemption from the recognition requirement under this standard. Likewise, if there is a lease of an asset which is of low value, similar exemption will be available, however, only to the lessee. So lessee can avail exemption of recognition and measurement requirement within this standard if any of the conditions exist. Number 1, it is a short-term lease. Number 2, it is a lease of a low valued asset. So before we go deeper into this, you should be very clear with the conditions. if there is a short term lease, whether it is of low value asset or high value asset, the lease will be eligible for exemption under Ind AS 116. On the contrary, if there is a long term lease but it is a lease of an asset which is of low value, then also the exemption is available. Most important point that you should consider, lessor is not supposed to take the benefit of this exemption. That means for the lessor, the accounting has to be done as per Ind AS 116 in its entirety. No exemptions available to the lessor. Lessor are supposed to simply follow this standard with respect to any type of leases they come across. Lessees have been given this exemption. So if lessee falls into this category of exemption and takes a choice of this exemption, mind it, this exemption is not made a mandate, it is just a choice of the lessee. So if the conditions are fulfilled and if the lessee wants to avail the exemption, then what should be the mode of accounting? That would be a question mark. The answer is very simple. In such cases, the lease payment during the lease term shall be recognized on a straight line basis or any other systematic basis that the lessee prefers. Let us note down that point of recognition exemptions. So what we have just discussed, a lessee can elect not to apply Ind AS 116's recognition requirements to short-term leases or leases for which the underlying asset is of low value. Now, we have also discussed one thing, that if the lessee elects to apply the above recognition exemption, what lessee has to do, I have already explained you. The lessee shall recognize the lease payments associated with those leases as an expense on either a straight line basis over the lease term or another systematic basis, if that basis is more representative of the pattern of the lessee's benefit. Now friends, what you find on screen is something very, very important. I would want you to note it down quickly. Alright friends, after writing up this, let us discuss what are short-term leases. My important suggestion to all of you, don't be ignorant about certain important things. Many students, what they do is, the moment they come across short-term leases, because they have a perceived notion in their mind that okay, short-term leases are leases of period of 12 months or less, it is short-term lease, that's all. Not like that. What is the meaning of short-term leases and what are the other important conditions needs to be understood very well. So definitely, short-term leases are leases for a period of 12 months or less, definitely not crossing the period of 12 months, one thing. However, lease should not offer an option to the lessee to purchase the leased asset. If there is an option included, even if the lease is of 3 months, if there is a purchase option included in the lease, it will not be eligible for exemption. Means it will not fit into the definition of short-term lease as per the standards requirement. So, a lease which is for a period of 12 months or less, and such lease should not provide an option to the lessee to purchase the leased asset. Secondly, this condition of this duration of lease of 12 months or less should be existing on the date of inception. Means at the inception of the lease, the duration of the lease should be 12 months or less. It may so happen that initially the lease was planned for a longer period, say 3 years. Later on, the lease duration was reduced to just 6 months after maybe commencement. And then the lessee is of the opinion that now because the lease duration is only 6 months, let me take the benefit of exemption and let me not apply Ind AS 116. It will not be possible. That means at the inception of the lease, when you are making the lease arrangement, when you are signing the lease contract or lease agreement, at that point itself, the lease duration should be 12 months or less. A longer duration at that date will not be making the lessee eligible for that exemption. most importantly we can say it will not fit into the definition of short term lease. So friends, what happens, these definitions may include one word like at the inception of the lease, but those words you have to be very careful about. That means these conditions must exist at the inception of the lease. So let us write up this important point as well. Alright friends, so let us write what we have just discussed. It was a meaning of short term leases: a lease that at the commencement date has lease term of 12 months or less and does not include an option to purchase the underlying asset. Now friends, what you need to understand is this test has to be made at the commencement date. That is also we have discussed, right? So as I gave you the example, suppose at the commencement date the lease term is 15 months and later on the lease term is reduced to 9 months. It cannot be classified as a short term lease. So let us write a note about that as well. As the determination is made at the commencement date, a lease cannot be classified as short term if the lease term is subsequently reduced to less than 12 months. It has to be 12 months or less at the commencement date necessarily. So please take note of this as well, and then we shall move ahead. Alright friends, there is some more discussion which is important with respect to short term leases. First of all, you don't have to consider an asset in an isolation. You have to consider the entire class of the asset when you are taking decision about short term leases. Now this point might appear to be little contradictory if you are not clear with the concept. That is why what I request is pay attention to what I am discussing now. See, you may not apply this judgment on asset by asset if the assets are belonging to one class. For example, if there is a short term lease of car and you have taken lease of 5 cars, 5 different cars, all are for a period shorter than 12 months. Say you have taken lease of just 6 months and there are 5 cars involved in the example. You may say that I would want to take benefit of exemption for 3 cars and for the other 2 cars I will apply Ind AS 116. It is not permitted. Once you have taken a policy of exemption, then you have to apply that exemption on all assets of similar type. Of such classification itself will be based on the class of the asset and not on asset by asset. So I repeat the example. The lessee has taken 5 cars under a lease. Each of the 5 cars were taken for a period of 6 months only without any purchase option. The lessee wants to classify the first 3 cars as under exemption and the other 2 cars the lessee would want to apply Ind AS 116. I told you earlier, this is not permissible. You decide one thing. If you want to take the exemption, you have to take the exemption for the entire class or for none of these. However, this point should not be confused with another important factor, that if the lease term of these cars is different, for example, if the lessee has taken 5 cars, one car is for 6 months, another car is for 9-month lease, and the other 3 cars are for a period longer than 12 months. Because these are cars and all are taken under lease, they may belong to same class, but the bigger criteria that you have to consider is the time period involved in the lease. So when it comes to different time periods, then you have to use this decision on asset by asset or lease by lease basis. You cannot say that the lease is to be applied for the entire class of asset and therefore I would want to consider all 5 cars under this exemption. You are not eligible because it is overriding one condition, that is the lease term has to be 12 months or shorter for availing that exemption. So friends, don't ever get confused with this. So what we will do is we will write up this note and we will take up some illustrative examples which will clarify application of this concept. So let us write up that note what we have just discussed. The short-term lease exemption can be made by class of underlying asset to which the right of use relates. And second thing, a class of underlying asset is a grouping of underlying asset of a similar nature and use in an entity's operations. So friends, do one thing, quickly write up these 2 points. We will then take up a small illustrative example that can clarify this point in little more details. First, write down these 2 points quickly.